Welcome to First Mover once again. This is your first global look at today's action in Bitcoin, blockchain, and digital assets. We have made it to Thursday. We've made it all the way to Thursday. I'm CoinDesk regulatory reporter Amitod Singh, filling in for Jen Sanasi. I'm here with my co-host, as always, Emily Parker, CoinDesk's executive director of global content, and Lawrence Lewitton, director of content at The Tie. Great to be with both of you once again. Good morning.
Good morning. I don't know what you mean by we've made it to Thursday. I have nowhere else to go.
Well, for me, I do actually have somewhere else to go, but that's okay. We'll get into that on Friday. Let's take a look at markets, starting with Bitcoin, as the Bank of England hikes a key interest rate by a quarter percentage point, which is its 14th consecutive raise. And there you see the CoinDesk Bitcoin price XPX index is currently 29,072. Yeah, don't forget, in the last few days, it did touch 30K. The CoinDesk Ether price ETX index is bearing some earlier losses after touching an intraday low of 1820. It's at 1832 now. And the TFX CoinDesk DeFi index is at 124.39, which is different because it's usually at 125. All right, looking at our top story, we're going to dive straight into that. Hong Kong is officially open for crypto trading to retail investors. Hashkey Exchange and OSL Digital Securities Limited have won Hong Kong's first crypto exchange licenses under a new crypto rules regime that allows serving retail customers. Let's just understand what that means with Emily. Emily, how significant, important, good news, bad news? What does this really mean?
It's very significant. It's definitely part of Hong Kong's attempt to position itself as a crypto hub. I think there's a lot of information we're going to have to see, though, in the coming months and years, because one thing that's very notable about Hong Kong is that it's very, very strict, particularly about crypto exchanges. So I'm curious to see how many other exchanges will manage to successfully get a license in Hong Kong, because it's definitely not going to be easy.
Emily, if I'm correct, so Huobi is still waiting in the wings, aren't they? And those guys, and those are some of the bigger players.
Yeah, I mean, there's a lot of really strict requirements, and I think that's something. It's just kind of an interesting thing because Hong Kong is being talked about a lot as welcoming and as a crypto hub, and in some ways it is, but that doesn't mean that it's not going to be one of the stricter jurisdictions in the world. So yeah, I mean, there's very few exchanges that are really going to make it, I think. So I'm really curious to see how this pans out.
And Emily, does this solve the problem of fear amongst those interested in being a part of the crypto market in Hong Kong when they think about China and the overreach that China can have in a one nation, two system kind of concept?
Yeah, I mean, so I think it's generally understood that if this is happening in Hong Kong, at least has the tacit support. I mean, probably more than tacit, it has the support of Beijing. But yeah, I think there always is some sort of question about, what happens if Beijing changes its mind, or what happens if Beijing backtracks. We don't have any evidence that that's going to happen, and who knows, maybe it could move in the total opposite direction. But there is a little bit of uncertainty. I've heard that from certain people who are looking into the Hong Kong market.
All right, we're going to talk to you about Japan in a bit, but let's just turn to the state of crypto in other parts of the world, particularly the US.
The State of Crypto is presented by Tron, connecting the world to the power of cryptocurrency.
All right, Semafor, the news publication, has reported Binance may face Department of Justice fraud charges. However, prosecutors are considering alternatives given the risk of an FTX-style bank run. And joining us to discuss that is Jones Day partner and former director of the CFTC's, I want to say this right, Market Participants Division, Josh Sterling. Welcome, Josh.
Hello, pleasure to be here. Thank you.
Oh, it's great to have you with us. I couldn't have thought of the entire team actually couldn't have thought of a better person to have on this day, given your previous role. And we were just thinking what you make of this. What do you think of officials, thinking about the impact on customers if they actually go ahead and take severe action against Binance?
Absolutely. Well, that is a totally appropriate and normal action that the Department of Justice would take when evaluating whether to bring criminal charges against the corporation. In other contexts, they look at the harm to shareholders. I think by analogy here, you'd say, what are the harm to people that are using the Binance platforms to trade? And I think it is of significant note that, I checked this morning, Binance is 7 times the size of Coinbase in daily volume. It is by far the largest exchange in the world by any measure, and it is well known that U.S. individuals do use that platform, and not just Binance US. So they do have to consider these things in assessing whether to criminally charge a company, because that is usually what we call the death blow, and that's not a legal term. That's just well understood that criminal charges are often fatal to a company and has severe consequences for all stakeholders.
Can I just follow up real quickly on that? Because it's interesting that you say that's a death blow, because, it seems that some of these companies, these more global companies that are being sued by the SEC or the CFTC, they're kind of blasé about it, because they're like, oh, we have a global business. I mean, we had Justin Sun from Tron on the show, and he didn't really seem that concerned about what was going on with the SEC. So why is the DOJ a death blow when the SEC is not?
Right. Well, fair point. I think the significance can be distilled into one concept. I'm a simple guy. DOJ can put you in jail. SEC, CFTC can't.
But I mean, if they're outside of the United States, and if the majority of their business is outside of the United States, and they're in a place that they can't be extradited to the United States, does it actually matter?
I think it does matter, and in that regard, I would refer you to other recent actions involving large non-U.S. cryptocurrency platforms or trading companies where there were significant issues. I think also it is sometimes quite often for the United States to assert jurisdiction over non-U.S. companies. All you got to do is use the means or instrumentalities of interstate commerce, and that can extend fairly far. There are live arguments about that in the CFTC and SEC cases against Binance right now. And you're certainly right that in one sense you could say, well, a lot of Binance's business, its operations, its customers are offshore, so no big deal if they're sanctioned here in the United States and are prohibited from doing business here. It can also be, though, if you're criminally charged and indeed convicted, if it were to go to trial as a company, people might just not want to do business with you anywhere. And so you can certainly settle with the SEC or the CFTC, or even if you lose in court, you're paying a specific amount of money. You may be subject to some limitations on your business. But it is certainly much more severe to face the possibility of an actual criminal conviction. It would. Go ahead. Yes. Sorry.
Yeah. Sorry. I just wanted to pick on this a little bit more. The article that we have referenced is a publication called Semafor. They are the ones who've broken this as a scoop, and they say that that they are considering fraud charges,
right,
but they're worried about a bank run. Right now, fraud charges don't necessarily lead to let's say a bank run. We've had those fraud charges. They are not saying that they are thinking of arresting an individual or several individuals, or that they will seize any websites. That's not what we know right now. So unless they say that, there is a worry for a bank run. But considering fraud charges, there shouldn't be a worry for a bank run. Is that clear enough?
I understand, and I'm familiar with the Semafor article. I'm not sure that I would be so quick to dismiss the likelihood of people pulling out of the business right away. And I think bank run in this context would mean, complete loss of liquidity in many main tokens, or the tie up of customer funds. That's the concern. And if you're a prosecutor, just like you're a civil enforcer, you could look at other contexts. I mean, most notably FTX, most notably Terra Luna, where there were other issues going on, of course, and say, look, the consequences are severe and not entirely predictable, because this is definitely an emerging technology, and the tentacles of Binance and where to go are not fully known. So that could be a substantial issue. Then you might also consider the second order effects. I mean, if you are a major source of liquidity for a given token, and there's 300 some tokens, I think, at least, I'm probably understating that, traded on Binance, and all of a sudden that venue dries up because people are trying to get off of Binance, that could severely affect the token as it's traded on other platforms, if I understand things correctly. So, yeah, yes.
I'm scratching my head at this, because on the one hand, it sounds like you're saying the DOJ is, I don't want to say cowardly, but they're kind of hesitant to to put a stop to something that they think may be a fraud. At the same time, they're like, well, we could prosecute a guy who runs one of the largest political parties and has had half the votes in the United States, and the consequences on that's not a big deal. But the consequences apparently of trying Binance is such a problem. They have to sit there and worry, like, oh my God, what if this happens? What if like 5 banks in Minnesota fall apart? It doesn't make sense. It just on the surface, if they're committing fraud and if the DOJ thinks they're committing fraud, who cares? So what? It implodes. You know what? The justice supposed to be more important than the consequences about a bunch of kids in their basement trading, a bunch of degens trading coins all day when they shouldn't be trading on Binance to begin with. I don't get this part.
Sure, that's fair. I completely understand that, and that's definitely a timely perspective you've offered compared to other prosecutions that are going on not 3 blocks from my office. So I think what I would say is that there is a policy of the Department of Justice. They've used it, they still use it, that says you've got to consider the collateral consequences of your actions. I mean, going back decades, leaders of the Department of Justice have said, the power of the prosecutor is, really substantial. It is life-altering, and it has to be used judiciously. So they may well fully decide, like, look, let's go ahead and charge CZ or any individuals or even the corporate entity with fraud. Let's charge them criminally. They may not, and they may try to seek a different resolution, a non-prosecution agreement or a deferred prosecution agreement. I can't.
What do you think they'll do? What do you think they'll do? We got to ask you that.
Well, that's fair. Well, if I were in the prediction game, I'd be in a different line of business. But what I think is, if I were sitting there in government again, I might want to see where the SEC and the the SEC and the CFTC cases go against Binance, and then make a determination on that. There are motions to dismiss right now the civil charges. They've put to the court, what the extraterritorial reach of U.S. law is, at least in the civil context. I do think that is a live issue. They might just let that run and let the SEC and the CFTC lead the charge. Then again, they might say, look, we're so convinced with the evidence we have that we need to charge because there are other issues, which I'll mention, that necessitate charging and collateral consequences considered but set aside. We're going to charge. You can charge and prosecute. You could charge and proceed and try to get to a deferred prosecution agreement or non-prosecution agreement, so that you're not getting a conviction. But I think that one thing that the procedures say at the Department of Justice is you have to consider other law enforcement priorities. And look, there could be national security or tax priorities that might say we do need to proceed here. I mean, I think they would be considering that. Yeah.
So assuming Hunter Biden isn't on the board of Binance that we don't know about, and they go through and they decide to prosecute and what have you. Okay, well, who goes to jail? Like,
sure.
Ultimately, does anyone actually go to jail?
Well, if they charge individuals and they're able to assert personal jurisdiction over them and get them into court and try, certainly those individuals could go to jail. There's obviously plenty of precedent for people involved in corporate wrongdoing serving hard prison time. I began my career when Enron was falling apart. Some people there spent some real time in jail. So I guess
Americans.
So what? Well, sure, but if you were an Austrian official at Enron, I'll pick on Enron because it doesn't exist anymore, and you participated in video calls or you sent wires into the United States, you're fair game. There is the U.S. jurisdiction over wrongdoing, particularly fraud, where the national interest is considered, is pretty substantial. And so they would have a basis for doing it. Now, you could well imagine scenarios in which certain potential persons of interest in the case who wind up being charged take measures to avoid U.S. jurisdiction. That can certainly happen. I know in the Terra Luna case, Do Kwon had attempted to do that. It was not successful. So I think the so what is, for an individual, yes, service could be made on you. You could be extradited to the U.S. You could face charges and go to jail. For a company, I mean, it will just end the company. If you're criminally convicted, no one's going to want to do business with you. Probably even criminally charged.
Yeah. No, we should note right now that Binance declined to comment, and the Justice Department also didn't immediately respond to CoinDesk's request for comment. Thank you so much, Josh.
Sure.
That was Jones Day partner and former CFTC Division Director, Josh Sterling. Thank you very much. All right, coming up, a closer look at how the Curve Finance exploit has impacted CRV's token.
The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
Curve's native token, CRV, has fallen roughly 20% in the past week. And Kaiko is out with some new research since the exploit that puts more than $100 million worth of crypto at risk. Not the research, but that's how much is at risk. Joining us now to discuss the latest with the Curve exploit is Kaiko research analyst Riyad Carey. Welcome, Riyad.
Hi, thanks for having me.
Glad to have you on. So let's start with CRV's price. Unpack it for us here. I mean, we saw this downturn, of course, and we actually saw a couple of interesting things yesterday. There was a little bit of a sell-off. There's some discussion that the founder of Curve might be doing some OTC trades, which aren't necessarily seen on exchanges, but can be found on the blockchain. So can you talk a little bit about all that?
Yeah, so the founder and CEO of Curve had deposited about like a few $100 million worth of Curve tokens on a variety of DeFi lending and borrowing platforms. Sort of using these tokens as collateral, he had borrowed about $100 million worth of stable coins. So when Curve was hacked, there was a lot of concern, basically, that this position would get liquidated, which would have sort of huge ripple effects that we can get into a little bit later. That has not played out yet. We did see that because the Curve ETH Curve pool was hacked, you can see on the chart there that the price of Curve briefly dropped like below 10 cents. That was just on Curve. And then on Uniswap, it also dropped as well, compared to centralized exchanges where, as you said, it dropped about 25%.
What was interesting too on that whole aspect was that Chainlink came to the rescue, or actually centralized exchanges came to the rescue, as we've discussed, I think here, because the oracles were put in place, and it's something that Binance's CZ was touting, that hey, you know what, centralized exchanges saved DeFi. What does that have to do ultimately with between that and also just some of the actions that Agarwal did, when it comes to liquidity with CRV? Ultimately, are things kind of stable now that we know that, hey, the oracles that put in place were kind of safeguards and everything is okay again? Or don't hold your breath?
It's hard to say, because some of these positions now have some of these loans now have really high interest rates, especially the Fraxlend position.
Abracadabra.
Yeah, and now they're all sort of kind of jockeying to get their loan repaid first. The different DeFi protocols are. So that's sort of an interesting wrinkle. I mean, he has a lot of Curve tokens, so it's basically how much money can he get for those Curve tokens. And I think that's why we've seen a lot of these OTC transactions. Curve has by far the highest average trade size of any exchange, centralized or decentralized. I mean, in the last bull market, the average trade was about $100,000 for a period of time. So they have these sort of close relationships with whales, with DeFi protocols. I think they have a lot of respect amongst that sort of Ethereum crowd. So he's been able to, sell these tokens over the counter to DeFi treasuries, a couple of VCs, just some Ethereum whales, things like that. And actually, as the last chart you showed, there's sort of an interesting phenomenon where normally after an exploit we see liquidity drop, especially on the bid side. Here we saw basically the opposite. After the exploit, there was a huge surge in bids, about $1 million worth of bids added on Binance alone. And because it was so concentrated on one exchange, it does sort of give the appearance of, not necessarily a market maker, but somebody else that's saying, okay, look, I'm willing to buy Curve at this price, and I'm willing to sort of support its price here.
Actually, there was also a big surge on Upbit, the largest exchange in Korea. I was wondering if you were following that. Oh, I heard rumors that was market making as well, but I don't know if you have any thoughts on what happened there.
Yeah, I think there was a bit of a surge on other exchanges, but we definitely saw the most pronounced one on Binance. And I guess the issue with centralized exchanges is you don't know who it is. So you could speculate that it's market makers. I think anecdotally we've seen in the past that sort of market makers will step to the side after an exploit as sort of information is still coming out and it's not totally clear what the fallout will be. So it is pretty unusual.
But do we think that this was one of these situations where it was too big to fail and they had to jump in and everyone had to save each other if they wanted to save the industry?
I think there's some element of that with the OTC transactions, where essentially it was like, these are Ethereum whales who have probably used Curve a lot in the past. They probably own the Curve token already, and they're, want to support the protocol, see an opportunity to get in. They were buying it for 40 cents when the price is, is a bit higher.
Yeah, I was just going to ask that. Like, was it just people seeing a buying opportunity, right? I mean, every crisis has opportunity, I suppose.
Yeah, for sure. I mean, but I guess, the thing is, if they were to move those tokens to like a centralized exchange, people would assume that they were selling them. So it's just very highly scrutinized now, just because so much of this has played out on chain.
So just one more thing, you had a chart there of Aave and versus CRV. So what's going on there?
Yeah, well, because these loans are so massive on a variety of protocols, Aave is by far the biggest loan. I think when I wrote about this last month, he had borrowed about 60 million USDT, and I think it's reasonable to speculate that if this position were to get liquidated, there is nowhere near enough curve liquidity to liquidate it efficiently. Essentially, Aave would be saddled with a significant amount of bad debt. And in those situations, Aave has this thing called a safety module where they auction off, or they sell the Aave token to cover any shortfall, which obviously would put a lot of pressure on Aave's price. I personally don't think it's the greatest mechanism, but I think that's sort of like the second order effect of this exploit.
Sorry, could you just say why you don't think it's the greatest mechanism?
Yeah, I mean, it's sort of protecting the protocol with its own token. If it were to get saddled with bad debt, presumably people would be selling the Aave token already. Then it has to pass through governance to then use the safety module. So there's a whole lot of time to front run a huge amount of selling. To me, that just doesn't seem that efficient.
All right. Thank you, Riyad. That was Kaiko research analyst Riyad Carey. Thanks very much for joining us.
Thanks for having me.
Our pleasure. All right. Our next guest is a veteran of the Bitcoin world, having been around for all 4 halvings. He also founded Epiphyte, one of the first Bitcoin remittance companies, and is now a core contributor to an entity firm called Sovryn, the leading Bitcoin DeFi protocol. And joining us now to discuss that is Edan Yago. Welcome, Yago. Can you hear us first?
I can, yes. Thanks for having me.
Great. Yeah. No, it's great to have you on. We have several questions. We just want to start with hearing as much as you can tell us about your, let's say, interesting story, your background, and how you came into the world of Bitcoin and Sovryn, how it has connections in World War II and in apartheid South Africa. Very briefly, if you could just explain why that brought you to this space.
Sure. Well, I grew up in a family that had really experienced the 20th century. On the one side, my family were Holocaust survivors, and the way that they survived the Holocaust was they managed to convert what money they had into precious gems and smuggle those gems through their adventures trying to survive. And that was the money that they used to survive. And in South Africa, my family, I grew up in apartheid South Africa. My family were active against the apartheid government. And at some point when I was a young boy, part of my family were declared by the apartheid government to be terrorists and were forced to flee the country. And so as a young kid, I was smuggling money to them to get money out of South Africa. And the way we were doing this was I was smuggling gold on my person. And so that was, those were the stories I grew up on, and that was my formative experience. And many years later, when I was older, in 2011, I came across the Bitcoin white paper. And for me, it clicked immediately. The realization of how important gold was and self-sovereign money was to individual liberty and the ability for people to maintain their freedom in the worst situations clicked for me immediately. And when I saw the opportunity to have digital gold, it was something I became very excited about and wanted to have a hand in helping spread to people, especially before they knew they needed it.
But have we seen that actually happen? Because we're seeing, of course, a bunch of things happening in the cryptocurrency world now. The centralization aspect of crypto in terms of markets and the institutions that are coming into it, regulation that's increased in crypto, maybe not touching directly Bitcoin, but nonetheless having an effect. Is it really becoming that self-sovereign money, if you will? Or is it just, not living up to its dreams and a potential failure even?
Well, Bitcoin and crypto right now is going through a very important and difficult puberty. On the one hand, pulling at its soul is everything that you just said, right? Move fast, break things, regulation, institutions, number go up, all of the things which are effectively creating a caricature, sort of a less regulated version of the current corrupt world of finance and the unreliable world of government currency. And on the other hand, we have hundreds of millions of people around the world who actually are discovering the ability to carve out a degree of self-sovereignty that they've never had before. People like me and probably like you who hold Bitcoin as a way to have access to funds that they have anywhere in the world. Hundreds of millions of people, especially in the developing world, who use it as a hedge against inflation or as a way of performing remittance or performing transactions outside of capital controls. One of the first companies that I was involved in the Bitcoin space was a company called Epiphyte. It was one of the first remittance companies in the world, and that used Bitcoin as its rails. And we were sending funds from Europe to Thailand, to Zimbabwe, to Nigeria, to Brazil. All these countries, what unified them was very significant capital controls. People could not transact freely. And Bitcoin for them, and today Bitcoin and stablecoins have represented a way and are representing a way for them to transact. I know people, and we work with people, for example, in Nigeria, who have small businesses, maybe the turnover of $250,000 or $1 million a year. One of them, for example, is importing car parts from Japan, used car parts. They can't use traditional rails to manage their business. And so what they do is they actually have, and this is apropos what you guys were talking about Binance, they have a Binance account and they use USDT to pay their suppliers in Japan. And that's how they perform business. And the same thing we see in Venezuela and in Argentina and in Zimbabwe and in South Africa. So this is absolutely something that is happening. And right now we're in the middle of a battle for crypto's soul.
All right. Okay. I just want to get into something very interesting that's happening right now with WorldCoin. You spent considerable time in Africa, and you followed the entire WorldCoin story. Kenya suspended WorldCoin operations officially and was the first country to do so. But it is also emerging now that effectively WorldCoin is saying that, well, we kind of like paused it on our own, or we did it before the suspension. It's not clear what the reasoning was. And, we're trying to understand how governments really function in that place, because, they were given approval, but now it seems they're suspended. It's not very clear. And that's something that we're seeing across the world with these, let's say, delicate investigations into WorldCoin without laws in governments in nations that actually can stop them. For example, in India, so I just want to understand what your take on that is.
Yeah, so what WorldCoin are tackling, the problem that they're tackling is a very important one. It's how can we create identity in a digital world and in a crypto world? And ideally, how can we create identity which isn't controlled by a corporation or a social media platform like Facebook, but that is controlled by the individual themselves? So I think the problem that WorldCoin are attacking is very important, but the way they're going about it is dangerous and suboptimal. First of all, WorldCoin is a company. So we haven't achieved this creation of an open protocol which isn't run by a company. We've just replaced Facebook with WorldCoin. The second issue is the way it's actually constructed. So in order to get a WorldCoin identity, you scan your iris. You give them a biometric fingerprint. And this is a very dangerous way of going about it, because that can get hacked, it can get stolen. There's no way to recover it. It's very easy for people to then impersonate you, or for that identity to be sold to third parties.
My understanding is that they don't actually collect the biometric data. It's used as a key, if you will, or like correct, they turn your eye scan into a key. And
that's correct. They collect the data of your iris and they turn that into a hash, and then you get a private key from that. But that doesn't change the fact that if you have an insecure device, or if you're a scammer and you collect people, you pay people to collect their ID, now you can impersonate them. And the system becomes immediately insecure. What a lot of people don't realize is that there are actually better alternatives, which are truly decentralized platforms and are seeing massive traction. Probably the most important of them is the ION protocol, which was originally developed as an open source protocol by Microsoft. And the way ION works is, instead of just having one particular source of an identity, you have multiple different attestations of who your identity is. So, for example, the college you go to can say, this is a certificate that I'm giving you saying that you went to a college. A company that you worked for can give you a cryptographic certificate, and you collect these certificates and choose yourself which to share and which not. And together they create a well-rounded profile of an identity. And an identity isn't really just a single point. It's a social thing. And what's interesting about ION is it's already being accepted by the largest universities in the United States and in Europe, by the largest companies in the world, and it uses Bitcoin to secure itself. So everything is secured by the world's most reliable and secure blockchain. And so This is more traction and better foundations, but is less famous right now because it doesn't have its own token.
And it's not run by the guy who runs Skynet. Sorry.
Yeah.
Nice one, Lawrence. All right, we're completely out of time. Yago, we'd love to talk more, but that's where we got to put a cap. That was Sovereign Core contributor Edan Yago. Thanks so much for joining us.
Thank you.
All right, coming up, does Japan have plans for a digital yen? Our own Emily Parker explores that question right up next. Welcome back. Central bank digital currencies are becoming increasingly controversial, at least in the US, where several presidential candidates taking strong stances against them. And meanwhile, in the rest of the world, 130 countries are exploring a CBDC, according to the Atlantic Council. Emily, you've been tracking what's happening across the world in Japan. It's the world's third largest economy. Does Japan have any plans to issue a digital yen?
So Japan has no official plans to issue a digital yen. The Bank of Japan has said that they very clearly that they don't have a specific plan to do this. However, they are still further along than, say, the United States, for example, because Japan has been conducting sort of proof of concept, pilots, technical tests. So basically their stance is that they have no official plans as of now, but they need to be thoroughly prepared in case one day they do decide to issue a digital yen.
Do we know if there's actual demand for it? I mean, we don't see any real Japanese yen stablecoin. So do people need this?
Yeah, great question. So there's actually two questions in that question. So the first is there actual demand? No, I don't think there's demand for it in Japan right now. I think that Japan's position is that there's no demand for it right now, but they need to be prepared in case there's demand in the future. And I think according to their definition, what demand in the future would look like is if for some reason cash would become less prominent in Japan. Japan's kind of interesting because it does actually have a lot of digital means of payment, but it also is a very cash heavy society. So I think the idea is that like, as long as cash is around, it's fine. But, you know, if cash diminishes, then they would consider issuing something like a digital yen. As for the stablecoin question, stablecoins had been effectively banned in Japan until very recently. It's basically just June of this year that stablecoins are now allowed are allowed in Japan for the first time. So I think that's going to be an interesting shift in the Japanese crypto world.
And how does it compare to the rest of the world where other CBDC projects are ongoing? How does Japan differentiate itself?
I think I would just say that the Japanese conversation about the digital yen is fairly calm and measured. It's not like in the US where there's a lot of panic about it and people are talking about it as a tool of surveillance and states are talking about banning it. So in Japan, it's a little bit, I would put it this way. There's not a lot of strong support for it and there's not a lot of strong opposition for it. They're just kind of trying to be thoroughly prepared, testing it. I think they are emphasizing privacy. They've emphasized that if there were to be a digital yen, it would be intermediated. It would be directly from the central bank. So I'd say it's a fairly calm conversation about the digital yen in Japan.
You know, the other thing is that we've actually seen how Japan's way of going about the digital yen is slightly different from some of the other parts of the world, where they've almost publicly acknowledged a very public government-facing and private partnership where, you know, these private companies are kind of helping the government almost openly, which is not really happening in other parts of the country. Can you shine more light on that?
Yeah, I mean, so I wouldn't say that Japan has never done any partnerships, but, you know, I think, yeah, it's definitely like a little bit of a quieter initiative than we've seen in other parts of the world, like, you know, China, for example, that is very advanced. And even Europe, we're seeing, you know, Europe will probably move more rapidly in this area.
All right. Thanks, Emily. That's it for First Mover. You're watching CoinDesk TV, of course. It's been a great pleasure having you other two on. And, of course, from the entire team, thanks so much for watching First Mover.